Okay, viewers, let's focus from one earnings candidate to the other. Let's talk with the management of Jindal Stainless. We have Mr. Tarun Kumar Khulbe, the CEO and CFO of Jindal Stainless, joining us on the show. Just taking a look at what those numbers are, they look like an inline set of numbers, although the volumes are quite flat. So, Mr. Tarun, my first question to you is on that itself. Your revenues have risen about 11% on a year-on-year basis, but volumes have remained largely flat. What has led to this divergence, and what's your outlook on volumes as we head into the new financial year?
Okay, so far as volumes are concerned, if you look our annual guidance for FY20, given a volume growth guidance of 9 to 10%, and we have ended up at 8.1%. Now, on quarter this year-on-year basis, Q4 to Q4, where you see the flat numbers, one of the major reasons being that due to this Middle East war, when it happened, and we also we had announced into the press also that our operations got impacted in the month of March because of the fuel crisis which happened into the country. We also found difficult to get the LPG and propane, which we use as a fuel. For that reason, our Q4 numbers, you see the flat, but otherwise annual our growth 8.1%. Going forward also for FY27, our guidance is 7 to 9% of volume growth.
All right, good to know about that you're giving decent guidance. But along with that, Mr. Kumar, give us some understanding on the domestic market front, because although the demand from the domestic industries continue to remain strong, influx of substandard imports continue to be a concern for India's stainless steel industry. The industry has been seeking relief measures from the government, but to know what's the decision has been pending, that is a bit of a concern. What is the industry doing right now to combat this problem?
Okay, so far as domestic industry is concerned, domestic market is concerned, I will say the market is doing well. There is a growth in all sectors. Now, when we come to the imports, that is definitely a matter of concern. In fact, there was still some check was there in the form of QCO, where government was not allowing or keeping a check on the quality of the product being used into the certain application, and that is how some check was there even on the inferior quality imports. Now, this QCO removal, which is of course temporary, which we believe should be temporary, definitely allows substandard material again getting into the country, and mainly from China. And this definitely is a matter of concern. We believe that this kind of sudden allowing of the substandard material, particularly from China, impacts the sentiment, creates a bit confusion on the investment part, on the capacity generation part. And we, as an industry, we are in dialogue with the government so far as for checking this substandard quality product import. Otherwise, also our ADD application is in investigation part, and there also because the process itself takes time, and we are continuously following it, and we hope that once the investigation process is on this front also some action should be seen. That's what the industry expects.
Okay, thanks for putting that into perspective for us, Mr. Tarun. Let's shift focus from that and let's talk about exports. What's been the impact of geopolitical conflicts and tariff uncertainties on exports? And assuming that the conflict in West Asia continues for some more time, how soon do you expect your export sales to normalize?
Okay, so our export as a percentage of total volume for FY26 has been 8%. Which was 9% for FY24. Now, on export fronts, as we see the whole year, there has been disruptions in different forms, from on policy front also, and now the latest is this war, which has created some disruption. But at the same time, even in our markets like US, Europe, we are still maintaining our presence. We are continuously working with our customers, and we are finding that our customers are also sticking with us because of our long-term relationship with them, with our quality being very well accepted, and all this. Looking at all this, we still believe that unless a major disruption further happens, we are still targeting around 8 to 10% of the export share in our total sales volume. And this 8 to 10%, when I say this is on the increased, this is of the increased volume which we have guided already.
All right, but along with that, Mr. Kumar, from 2.56 million ton per annum sales in FY26, you have reached a mark of 3.5 sales volume by FY29, and that's the target. What will be the growth levers for that, and what makes you confident of achieving this guidance going ahead?
That's a good question. Actually, if we look at it, that the country's domestic market is continuously growing. The way our country's GDP is also growing, and the way the government plans, we believe that the infrastructure sectors, even railways, infra, automotive, all this will grow. That's what we believe. And also beyond this natural growth, we also see a bit of mindset change, that in many applications where stainless steel was not in use, now people have started considering life cycle cost to make the decision. And whenever life cycle cost is used as a criteria to decide to use a product, stainless steel gets its own advantage. So we see this mind shift taking place more and more, so that and this will provide newer applications, newer further usage of further more usage of stainless steel. And with all this, we believe that we will be taking our sales volume towards 3.5 million by FY29.
Good. Mr. Taran, earlier in our conversation, you were talking about raw material prices. Talk to us if they are a concern for you at this point, since the West Asia region rather is a key sourcing region for you for industrial fuels like propane. You have LPG, natural gas that are critical to stainless steel manufacturing. Help us understand if you have started to see any pressure on the sourcing front.
Okay, so when this war started, there was an immediate disruption for us. That's what I informed, because we use propane and LPG as a fuel in both our integrated steel plants. In our subsidiary at Mundra, we use natural gas as a fuel. There also there was disruption, but still that was lesser. But propane and LPG became a bigger disruption. Now what we are seeing, that the availability has improved, the prices are very high, and the already multiple times higher than the pre-war period, almost 3 to 4 times prices we are paying, because we have to buy from the private parties, as the government has mainly kept LPG for the public usage. So now availability has improved, but the costs, but all these high prices are impacting the cost, and it is a bit more concerning also for us, because in the countries from the material gets from countries like China, Vietnam, there we don't see that much impact of the fuel price hike as we are finding as of now in our business.
All right, but along with that, let's talk about the margin and the outlook, because for FY27, where do you see your margins headed? And given what's been happening in West Asia, are you confident of sustaining the margins to around 12 to 13% mark, despite all the challenges that you were just highlighting?
Well, as of now, as of now,
Yeah.
so far as our margins guidance is concerned, because of so much of uncertainty, and already I talked about the fuel prices increase and all. So we are providing a guidance for H1 only. So whatever the numbers which I am giving you is for H1. So while volume guidance which I've given 7 to 9% is for the whole year, but EBITDA guidance right now we are providing 18 to 20,000 rupees a ton. But for H1 now, after that we will again review the whole situation and we may provide the revised guidance.
Absolutely. And Mr. Tarun, lastly, before we let you go very quickly, from about 43,000 crores revenue in FY26, what's your target for revenue for FY27? Any number that you can help us with?
Uh, right now we have provided the volume guidance. Now it also in the stainless steel, the total revenue also depends upon how the raw material prices move, and they are quite volatile. As of now, the in the last quarter, the nickel has gone up sharply. But looking at this, I think at this stage, if we keep ourselves at the volume increase guidance, that would be more practical to provide.
All right, and we look forward to that. But so good having you on the channel today, Mr. Kumar. Thank you so much for taking the time out and speaking with us. Much with this, viewers, we are completely timed out in this edition of Midcap Masala. It's a goodbye from me and Snehi and the entire team who put the show together. Thank you so much for tuning in, but don't go anywhere. Bye now, sell now. We'll take the action ahead.